I'm Charlotte McLeod with investingnews.com, and here today with me is Tavi Costa, CEO of Azuria Capital. Thank you so much for being here. Great to have you in person.
Yeah, thanks for having me.
Yes, of course. So we've got a lot to cover today, but I think where we should start is with gold.
Yep.
When we last spoke all the way back in March, you said you didn't agree with the commentary that gold's price run was over.
Yeah.
Since then, we've seen the metal keep pulling back. We
Yeah.
even got below 4,000 for a little bit. So tell me what you see driving this decline in gold right now.
I think it's just positioning. I don't think anything has changed in the thesis overall. I would suspect that we're just seeing a resetting of sentiment. Already happened, most of it. I think we're at most oversold levels in terms of the short term, how much we sold off in such a short period of time since we saw back in '08. However, what's positive about this, if we look back and we date back how much gold is down, it is interesting that if you take the producers or the explorers in relative terms to gold, you're going to see that they've been outperforming quite well, which is usually a good sign. It's a sign that smart money is allocating capital into this industry of mining and staying, which is absolutely key for the long term of this whole thesis. So it's actually very, very positive, the developments that have been happening. I don't think anything changes what we had in mind before.
Well, and so you said most oversold since all the way back in 2008.
Yeah.
So for you, I think a lot of people are seeing what's happening. They're wondering, all right, is the bottom in for gold? Do you feel like we've gotten there?
It's impossible to say definitively, this is the actual bottom. I think all these things are a process. But I think there's plenty signs that we're close to it. If you look at silver as well, just looking at the flows over 100 days on the SLV, just because SLV has a lot of liquidity, it doesn't mean that's the place where anybody should be investing or not. But you can sort of see that institutionally we've seen close to capitulation levels. The flows have declined by about 55%, which we've never seen in history. And you can say, well, what about nominally? If you look in dollar terms, it's by far the largest, selling we've seen. And so I really think we're close to the, that's a great sign of potentially a process of bottom happening. Sentiment, same thing. Positioning, the same thing. And so I think volatility will be here because once you trigger, if you have a large position in your portfolio, in your institution, and you see a decline like we saw recently in such a short period of time, you have to pare down a little bit your positions to kind of manage liquidity and volatility. And so I think it's normal to see that being impacting daily volatility on the metals, but I think the worst is behind us, if I would guess. Yeah.
Okay, well, that's really good to hear. One of the factors I've been hearing about as weighing on gold right now is the strength in the US dollar since the Iran war began. So I know you've got a lot of thoughts on the dollar. How long do you see that strength continuing, or relative strength?
Yeah, I think that's been a bigger surprise to me than the price of gold itself. I think the dollar strength, the magnitude of the strength we've seen recently, potentially has, obviously had a very big impact on gold, but I don't think that that's a long-term movement. I think that this breakout on the dollar that we've seen on we're using DXY index here for a way of proxy to the dollar. I don't think that that's a real breakout. I think that that's the way you look at breakouts. I mean, the longer horizon you have of a breakout, the more relevant it becomes. And in this case, we're looking at a less than 12 months kind of breakout. So I don't think necessarily we should put a lot of weight on thinking that that's going to be a meaningful move to the upside. I think we're going to see a reversal. Back in 2024, I believe, when we had elections, that was when I flipped my views on the dollar. Immediately when I flipped my views, the dollar surged, which had nothing to do with my views. My views were that I was very negative on it. And that's a great lesson for everybody here, that I don't have any control over what the market's going to do, but I have a view. But immediately after that, because people thought that the dollar's strength would be in line with Trump's policies, which I thought was crazy at that time, reverse in the next month in a huge way and started what we saw basically the peak of the dollar here recently. And so I think that type of reversal could happen here as well. I think what we're seeing is more ramifications of the war and other things. To be in a dollar system, given how overvalued the world is in terms of assets, I should say, in the U.S., I don't think we can, sustain a strong dollar. And so I think that in order to be in a dollar system, we're going to have to devalue the dollar. So I'm going to stay firm on that one. Yeah.
Yeah. Well, and speaking about the Iran war, it was just beginning the last time we talked. We've seen it develop over the last several months.
Yeah.
And it's really raised concerns about inflation. So I want to get your take on that as well. How hot do you think it could run?
Well, there's two types of inflation, just to divide it up. One is real inflation that both of us and any other citizen of the world in the U.S. would feel in their pockets. And then there is another inflation, which is what the government reports. On the government reporting side of things, I would say get ready for probably we've seen, I think that the data that is coming in is still likely to accelerate a bit further. But if you look at the inflation expectations driven by the market, which is basically an expectation of government data, that has collapsed. That's the break-even rates. In any metric you look at, 5-year, 2-year, 1-year, 30-year, 10-year, doesn't matter. It's been collapsing. 30-year, it's been the worst. But so the longer you go, long-term expectations of inflation have really collapsed. When you look at the commodities market, on the other hand, what you saw, if you take an equal weighted index of commodities, they broke out recently before the war. And then now with the decline in most commodities, we're kind of sitting in a support right now. So as inflation will probably find a bottom here, inflation expectations, I think. In terms of the real inflation, which for policymakers, it doesn't matter much. For us, it matters a lot. Nothing has changed. I mean, things are still getting more expensive. Everything we buy, it's getting more expensive. And we're in an inflationary regime. And we have to act accordingly and own, in my view, a lot of hard assets to protect. And I don't think that's going to change anytime soon. So, I try to divide those two because I do think there is a relevant separation between the two.
Yeah, I think it's important to make that distinction because certainly people can feel it much more in their everyday lives. I think all of these inflation concerns and discussions have sparked talk about what is the Fed going to do. We have a new Fed chair with Warsh. He seems like he wants to do things differently, but to what extent can he really do that?
It's very similar to the Doge situation, right? I mean, if you remember, we were thinking about doing things differently. We're thinking about lowering government spending, lowering all the frauds that we've seen with payments to organizations that were not supposed to be spent on things that we never thought it would be spent on. And where's that at? It's over. I mean, Doge is gone away, and the whole excitement behind that has gone away as well. We're in the similar situation now with the Fed. What can the Fed do? There's a few options. They can say, look, we're going to raise rates massively, and that will tighten conditions that will cause inflation to lower. There's arguments against that too, but let's just say that that's probably unlikely in my view, okay? Very unlikely. And I disagree with the market because the market thinks we're going to see hikes, and I don't think so. The second way they could approach it is look, inflation is running hot than we thought. In the government data. And the way to do this is we increase our target and say, look, instead of 2%, now it's 3 to 4, and we're okay with that. Well, if Warsh is trying to bring back credibility, that's not one way to do it. So I wouldn't put a lot of weight on that either. So what's the third option? Well, the third option is you change the inflation calculation and you say, well, maybe the way we were calculating inflation is not as bad as we thought because there's a lot of productivity gains and all sorts of things. And of course there are some productivity gains as always, but let's be honest. I mean, we all know that, cost of things have gone up a lot. And I think that that's a very likely scenario, that they're going to change the way we calculate things and justify in that manner a rate cut here, in the next 6 to 12 months. That's my view.
I think of the three options, for sure, that sounds like the most likely one. So we'll see how that plays out, and ties up into another point I wanted to bring up. You wrote on X recently that one of the defining macro themes of the next decade is going to be whether America can restore the fiscal and monetary discipline that made it the world's financial leader. So I wonder, keeping in mind all these things, we have these instances where people say they want to have change. Do you really think that's possible?
So I don't know. It's a question that as an investor, I wrote this as an open letter to America on 4th of July with the idea of just sharing my views about what the problem is and what concerns me about this great nation and how we turn one of the greatest experiments into the best thing that probably has ever happened, economically speaking, in a country in terms of development, which is the U.S. And when I think about the next 250 years, I think the biggest challenge, it's hard to argue against monetary and fiscal disorder that we're facing. And if we don't deal with that, I really think that's going to become an issue here shortly, not just for the dollar, but also for U.S.-based assets. And as I usually say, there's one asset that holds the key for credibility in the system. That's treasury. And the treasury market is losing credibility more and more, not just because people like to report foreigners are selling and dumping treasuries. It's not true either. They're just not keeping up with the flood of issuances that we're seeing. And I don't know. Like as an investor, I have to think about and put some weight on what's the probability they will fix it. I think it's very small. I would say that it's more likely we're going to inflate our way out. And if we're going to inflate our way out, that's also not how you do it. It's not by bringing back order on fiscal and monetary speaking sense. And so I really think we're going to see inflation running hotter than expected, and I'm planning for that personally. That's how I'm invested. And I think if I was running the country, which I'm not, I would be, seriously thinking about that. And I understand the other side of it too. I mean, if you stop spending, if you say, all right, well, I'm the new president, I'm going to fix things, I'm just going to lower spending. Well, you're going to create a depression immediately because the economy is so dependent on that. And so it's a tough one to address. And I think that the U.S. is going to have to face that issue very shortly. A lot of people think the dollar and the treasury market is dependent on, how much credibility we have as a military power and other things. Not really. It really, sure, it has an impact, but it's not 100%. It really is what's the anchor of your monetary system. It comes down to gold, things like gold. Of which only 3% of treasuries outstanding are backed by gold today, which used to be 40+% in the past. I don't know. I think the U.S. is going to, in order to do a few of those things, one of the things I would start if I was in the government would be buying gold itself. And maybe they are doing, and we will know soon. But I certainly would consider that route if I was in this position. So.
I guess we'll see. It would be really interesting if we did find out the government is buying gold.
Yeah, I think it's a possibility. But if anybody's serious about buying gold and accumulating it to the degree like the U.S. would do, and how much they would have to buy to fix the imbalance that we have, you can't do that openly. That would be crazy. I mean, gold would be trading at 20,000 tomorrow. Like, that's just not, they can't do that. So they're going to have to quietly buy it and then announce to the world that they bought it. That's a serious buyer of what they would do. I mean, if you were buying an asset and you were a large player, you're Warren Buffett and you want to buy a company, you don't announce to the world you want to do it and then you go and do it. No, you do it and then you announce to the world. And so it's the same idea, the same logic, and I think it's potentially happening now. Who knows? Yeah.
Yeah. Well, and then if you buy it and you say you have it, I guess it becomes a question of how do you prove that you have it? Because we already have all these Fort Knox questions.
Yeah.
But yeah.
I mean, that's a very valid question and a whole separate issue. But yeah, I don't know, and nobody knows. That's And look, we're making an assumption that the 3% of treasuries backed by gold today is that gold you're referring to is really there. And if it isn't, this is why I go back to the dollar situation. And if we're trying to bring back strength of the monetary system and also credibility to the treasury market, which I think it's the most important thing. It's not even the strength of the dollar, it's the credibility to the treasury market. It's the biggest thing in my view. It's got to be restored by owning natural resources that back that market. And I just don't know another way around it outside of owning gold. So.
Well, and on the note of gold and other hard assets, I did want to bring up silver.
Yeah.
We're seeing a lot of questions from our audience about silver, mainly focused, I think, on is there a floor at that $50 level? And on the flip side, can we get back to $100 in 2026?
Ooh, that's a tough one to answer. I don't know the answer to that. Could we? Yes, of course. I mean, the volatility is there, and it's going to be up and down, not just down. And I would say on the floor aspect, I mean, any technical analysis, which tends to be a very simple way of looking at the world, and it doesn't mean it's wrong. It just means sometimes the world can be a little more complex than just looking at drawing lines and saying, well, this is a support. But I think everybody that has a chart in their screen will see that there is a very important support at 50. I would say with a lot of experience looking at this market, I think that the metal does not like to respect these things very much. I've seen it break it or not go there many times. So what I don't like about this type of analysis is that people come up and say, I'm not touching silver until it hits 50. And that's not how you should approach it, because it's not true that it's going to reach 50 and then find a bottom. That's not true at all. It could go to 45. I don't know. The only way you do it, in my view, is that bottoms are a process. You hold some cash and you keep deploying gradually until you find, like if you think that we're going to go to 120, 130, 150, who cares if you bought it at 50 or at 60? But you will care if you missed it and you didn't buy enough because it didn't hit 50 and it bottomed at 60 or 55. And so, I think that's a bigger risk to run than trying to perfectly find a bottom. And so, do I have a buy order at 50? Yes, I do, because I honestly think this could, if we see a huge dump in the market overnight and I'm sleeping and we go all the way down and we hit, 45 and whatever, I think we're going to try to get back to 50. So I have a buy order around 50, and I don't think I'm the only one. I think any hedge fund would have it too. So I'm not over my skis. I'm trying to be very disciplined, not trying to be the U.S. government here. I'm trying to be, run it more with a lot more discipline. I know how volatile it is, but I also think we could establish ourselves at triple digits in the next 3 years at least here, and that's the answer I need in my mind. Like, I don't need to answer the next 6 months if we're going to hit 100. That just seems like that's a big move, That's a big ask to have on silver. And if it doesn't happen, it won't change anything in my life.
Yeah. So we got to have nuance. And I'll tell you, you're not even the first person today who said, yeah, I've got that buy order at 50, even though I don't necessarily know. So I think it's a common line of thought, at least here at this event. I want to make sure before I let you go that we talk about copper as well. During that last conversation we had, you mentioned it could be primed for an explosive move like we saw in silver. So are you still feeling that way?
Oh yeah. I think copper keeps, I would pay close attention to the sell-off we had in metals, and you look at the copper to gold ratio has gone straight up. You look at the even copper to silver ratio has gone straight up. Copper continues to perform very well. Copper miners continue to perform very well. In fact, not too long ago, you could see a major divergence between where gold was falling and copper was keeping itself very, resiliently up close to the near all-time highs. I think, look, when we break to new highs, you don't go 5% above that. Like, usually you see a big jump. I think we could see a big jump. I think things are very cloudy right now. Everybody's looking for that bottom. As soon as the bottom becomes more and more pronounced and clear, I think copper is going to take the lead. That's my view. Could I be wrong? If I'm wrong, I'm happy because I also have gold and silver in my portfolio. But if I gun to my head, I think that, I think that copper has probably a better setup, asymmetrically speaking, to see a big move. If you think about it, we've seen a big move in gold when we reached that $2,000 level, and then we jumped to 4. And then silver is kind of similar. We were like 20, 30, then we went to 40, 50, broke out, went to 120. Copper hasn't done that. And so I'm just paying attention to it.
All right, and as we're wrapping up, we also talked last time about how we were at this inflection point for commodities more broadly. So gold had moved, and it looked like everything else was set to follow. Now that gold is in this pullback, are we kind of in a pause situation, or how do you see that?
No, look, my personal portfolio is definitely more heavily invested in the precious metal space again. I took a lot of, I was very, call it lucky or prepared prior to the war. Maybe we talked about this in prior interviews, not the last one, but the other ones about energy and how I was very, looking to build a larger exposure to it. I did. And once the war broke out and we hit 110 or something on Brent, I decided to sell just because it was way too off positioning wise, and sentiment was way off as well. And so I started selling my positions. And then as we saw, I held a lot of cash. And as we saw gold start to really fall, I started buying early in some cases. And I am now more allocated towards that. Took all that capital and reallocated into precious metals mostly. Copper, I'm already pretty heavy. Leave it there. And the way I've been behaving now, I have significant cash. So what I do is, when my positions, I want to have 3% on a certain miner, and it falls to 275. Well, I'll top it up, and I keep that position to a line where I think it's a full position and leave it there. So I would say in my history of investing in my personal portfolio, I would say I'm right now pretty heavy precious metals. One of the heaviest I've been to. So, but again, it's a very difficult market. So you do not want to be fully invested, in my view, and also don't want to be taking leverage. There's no need for it. So I just keep gradually. I'm lucky I have incomes that come from other parts of what I do for a living, and I keep reinvesting as I get more capital. That's kind of what I do without going over my skis. So, yeah.
Well, really useful to hear how you've rotated and how you're positioning right now. I'll let you go and send you back out onto the show floor unless you had any final thoughts to add.
No. Thank you very much for having me. I appreciate this.
Of course. Really great to have you as always. And once again, I'm Charlotte McLeod with investingnews.com. And this is Tavi Costa with Azuria Capital.